Hey everybody, DayTraderRockStar here once again here with another important video. This one is going to give you a beautiful tip on determining a longer term trend change. In this case, we're going to be talking about a downtrend going into an uptrend or a major pivot in the markets. And I'm here Friday doing my research and getting ready to put out the HPS watch list. I'm doing my scans. And I wanted, there's so much I put out there, and a lot of that information could be found all over Day Trading Radio. All right, if you go to the dashboard, there's a section down here. It's called the School of Stock, and you click on that, you're going to see some courses here. Now, these courses are intensive courses that I put out years ago and continue to update these. The Ultimate Divergence course and the High Probability course. Now, the High Probability courses are our golden, ticket, the golden egg. I love everything about it. I've spent a lot of time on this. The that was the Ultimate Divergence course. The High Probability setup is the foundation course that really gets you started in all the basics and everything here that you need to know and the stuff you don't need to know. Because again, I've been trading a long time. I've eliminated a lot of junk out of my trading and only develop on certain things, So with that said, there's going to be a new lesson going in there, and you're going to see part of it right now. All right, and I was just doing some research, and each Friday I go through the S&P 500, I go through the NASDAQ 100, and again, I kind of get these stocks that are quality stocks. I'm not just picking any stocks. I'm not going through every stock in the stock market, but in some cases I will. But when I'm running a divergence scan or running some of my scans that I work for different pattern recognition, I want quality names, and I could spot these things from doing it each and every day. But we have and over the years, over the 20-something years I've been trading, and over the 15 years I've been teaching, the one thing I've really noticed is you start to see things, patterns in the market play out over and over again. Weird patterns, not patterns that you would understand or see, but for me, like when I do my divergence scans, I'll notice every day there might be a lot of divergences. There might not be that many divergences. We're talking about 500 stocks, and we're having a certain criteria that needs to be met for a divergence. And a divergence is usually a big area where a big reversal is going to happen, based off the time frame. Because this scan is doing a daily time frame scan, these are going to give me daily divergences, and that's a better chance of a bigger turn to the upside of a new trend starting. I noticed whenever we have over 13, 14, or 15 of those, the market's very bullish, and we tend to get some. It stands out. Sorry for the start of that, but it does stand out. In this case, today we have 29 of them. 29 divergences in the S&P 500. That's huge. That means 29 stocks spread all over are setting up to move up. All right. Now imagine that. Again, S&P 500 stocks are weighted stocks on the average. So if these stocks are all in buy zones, it gives a good reason to believe that the market could actually get a lot of thrust from these stocks that are going to benefit from that divergence. Now, the lane divergence here is we're measuring momentum. And again, something that you could get in the course is how to determine that and how to read that and how that formula plays out in the market, but I'll kind of break it down into very basic terms. We're seeing how each candle is closing relative to the previous candle. You'll start to see those candles close higher and higher, meaning momentum is shifting higher and higher. And this is internally on the candle compared to other candles. So you can't really just gauge it on one candle. You have to gauge it from a bunch of candles. And that's why we use our stochastics, because our 9-3, our 14-3, our 60-10, those are how many periods we're going back, and we're taking an average of that. And then we're starting to form a line. And that line is going to give us those opportunities, or give us one that when the momentum is shifting and not even seeing it on the chart. Actually, we're making a low here. But now we're starting to push back up. So we're actually seeing some really good moves in some big stocks. 3M is an example right here. So I'm always looking to daily. And here's the daily time frame, right? And you can see a huge pop in it. And that circle, if you're familiar with the way I trade and the way I broadcast my stocks, and whenever we're doing live coverage, we usually circle someone will bring up the stock on the show or in the chat room, and I'll look at it. And if we like it, we'll circle it. Sometimes I'll put a note down. Sometimes I won't. But we'll analyze the stock and give an analysis of it and put it out there in the universe. So just recently, we liked 3M coming back down to the trend line. The HPS methodology tells us we want to take 3 indicators out of the 5 important ones. And again, the oversold stochastics is one. The trend line of a recognizable channel line, which is something that not everyone knows how to recognize. All right. There was one back here. We actually just came off of it. There is a slight divergence here too that you can't really see, but my formula is picking up a divergence here. There's a lot of interesting things, but what got me really interested in this is just saying, all right, whenever I see something, I sometimes want to look at the weekly. So I look at the weekly and I said, all right, we have that kind of a Nike check mark on the weekly. Now, if you go back and say, that's one of the main rules, 3 pillars of trading here with me is to have patience and discipline is the 2 of those. Patience and discipline. Patience to let the best setup come to you. All right. Once you have that best setup and all things are lining up, then you have a low risk entry. All right. And that happens a lot when you're starting, and we don't even look at this enough, but when the weekly stochastics start to move back up, you have a much better chance of follow through weeks, meaning that there's a bigger trend happening. So what I'm going to do is all these are setting up on a daily, all right? We'll start with extra space. You can see all these oversold, little divergence here, the higher low, the reversal candle. I mean, take your pick out of all these. I want to actually look at this one. CFO bought 1 million share insider buying back here, so that's kind of interesting. I just noticed that one. That was at $15. I circled it, put a note there saying represent what that circle means, and forgot about it. Now I come back and I see this stock at $8. So today I circled it because this guy liked this stock at $14. I have to look at what I would go with. The next part I would go to is just again going with my FinViz. I get so excited sometimes on finding some new setups here, possible big movers. And we're going to put in NWE, and we're just going to get some fundamental feedback on this here out of the FinViz. FinViz is a good site to do a lot of research. It's free, but you could get a membership for it if you want to use some of the more premium options that they make available. All right, so here is the but I like just using it for finding what the forward PE is, some of the ratios after making money, the insider transaction, the short float, the shares float and the shares shorted, short interest, target prices and stuff like that. So this is trading down at $8. There was a general target price at $14. October 31st was the last analyst according to this. There might have been some other ones here that didn't get picked up by FinViz. Barclays can't put out an equal weight to an underweight with $11 target. So for that, last year, March 30th, almost a year ago, JP Morgan overweight had a $26 target. Now it's trading at $8. So who's right and who's wrong? When do these guys get paid? I should be working here. I should be honestly working at one of these firms with my research. You guys are out there listening, give me a shout. I'll get you guys back on track. Let's go back here to the insider buying here. So we had some in May. Also, this is interesting. We did have some. We had some in May. This was the recent. We had the May 9th Chief Financial Officer. March 9th, excuse me. That's the one I think I wrote down. March 9th and 10th. Pretty decent amount. And then we have some here. Same guy picking up some more. $9 and $9.98. All right, so it's at $8.76. He's more insider here. Again, wherever this price was, he was buying more, but right around here. Wish I could put a line in here so it doesn't. I don't want people thinking that's where I'm calling to buy. I just want to make sure that that is insider buying, and this is insider buying here. All right. So those two are insider buying. And now I'm liking this NWL. Now $8. It's one of these stocks that could definitely go bankrupt. I'm not 100% sure where this thing is going, but everything here pointed to a buy right now. Everything pointed to a buy. Not to get too caught up on this. That's what I do. So I was just going through all these stocks on my daily. 3M, we just talked about that. Ralph Lauren, big divergence on Ralph Lauren also. And again, you could write these down and follow up on them. But these are all pretty much in an area where we could actually see some good bounces. And these are just on the daily. So once I notice that the dailies, Colgate-Palmolive, a nice divergence, I'll go through all these. I'll just pretend I went through all these. All these are going to have these lower trend lines and lower moves down, and they're going to be popping because for the divergence to be set up on the buy side, you're going to have that lower low. So they're going to be down here. Corning is something we just started looking at a couple days ago, which I like because of the divergence here. But now we just switch over to a weekly. I want to go to the weekly, and I think that's where we're really going to separate a lot of the stocks here. Again, we're only looking at the weeklies that are oversold and possibly just starting to turn back up. You might not see that. Like that was Newell brands. I keep want to call it Rubbermaid, but see, some of these are extended on the weekly. But here's 3M. Con Edison doesn't look that great on the weekly. So the daily might be setting up with the weekly. I like when you have the daily and the weekly setting up. And again, talking about having a criteria that keeps you out of trades. It's better to be out of the trade than be in the trade most of the time. The WAT, just looking for things. And we could easily do scans for this. You could set up your own scan looking for stochastic crossing above the 20 line and just do it on the, between 20 and 25. Sometimes I like to have my stochastics turning up on a weekly chart and moving up between 20 and 25 to 30 to get the momentum going. Very easy to run those scripts. If you need help with that, I can help you with that. Iron Mountain, you can see Iron Mountain on the weekly. Looks like it's going to break out here soon. So mark that down as a breakout play coming up. I've seen this chart before, and this is really good. That's a nice looking chart. International Flavors and Fragrances, again, lower trend line. It is definitely a situation here that you could see this move. The dailies right off the lower trend line. Wow, this is looks pretty good in itself. I'm not a big fan of the specialty chemical. Well, the chemicals are moving today. Actually, the chemicals are moving today. So there's another one, and I just wanted to kind of put that tip out there for you. Make sure your weekly is starting to turn back up. If you have your weekly turning back up, there's a good shot you're going to get a follow through. Again, if you're swing trading these, you're going to want to be in it to get the biggest amount of move in the shortest amount of time. Now, if you get a faster move, you take it off. But you're buying the divergence or you're buying the oversold level, so you're buying into weakness, and you have the weekly on your side, which is a good chance for a follow through. Don't really worry about what's going on, the choppiness, but over time, the weekly candles look good. And when we start to rotate up, you tend to get a follow through. You tend to get some follow through. You tend to get, even if it's one candle. And that's all we want. We want to hold this stock maybe 5 to 7 days. All right. In some of the cases, these might be great setups. Like Corning down here. Corning looks pretty good. Starting to turn back up. You can see the other times it's kind of got oversold. It was a nice weekly rotation back up. This kind of chopped around a bit into a wedge pattern, then got a pop. But again, you're oversold. You're on the lower trend line. Not all of them are meant to be taken. Gilead here on the weekly. And Devon Energy. Devon here, a nice double bottom divergence there. And I think we're coming up to the end here. That was it. Extra space storage. So again, that's just a little extra. We found a couple interesting things. The NWL, insider buying. We also like that area down there. What was and the 3M. with a nice Nike check mark. The Nike check mark here, very positive usually for a follow through. Big candle, outside day, plus a little divergence, plus a trend line. 3M all the way from 200 down. It got cut in half. So definitely you could see a bounce in this. So some of these stocks here are a little bit more weighted on the S&P. A heavier weight moves the average. We get some follow through. That's going to help the indexes. And we might actually see this rally continue because we have so many HPS setups, or we have so many divergence in the S&P thing. Now, I didn't run it through the NASDAQ 100. Let's just run it through the NASDAQ 100 fast here. Let me fix that. Oh, only Gilead showing up here. So only Gilead. And again, that's on the weekly. So I have the weekly up here. So let's switch it to the... Actually, do I have it just on the weekly? Let me take a Dow 30 here. 3M. All right, 8% move today on 3M. Wow. That's a big move. 8%. All right, well, that's it. That's the tip for today. Make sure your weekly's lined up with your daily for swing trades. Very simple. Do your scans on the S&P. That's half the job right there. Why would you take it if it's heading down? Or, or getting into overbought levels when there is a shot. And again, on that weekly, you don't want to be in a situation where we're heading down on a weekly. You could get, your stock could just get grinded out, especially if you're in options. So one of the basic rules of, being in calls or be in the direction of the flow here. And we haven't confirmed the direction of the flow, but it does, some of them we have. All right. Have a good one. We'll see you at DayTraderRadio.com.